Hey, thanks for tuning in. This is a weekend review for the week ending April 22nd, 2022. Looking at a chart of the S&P 500, this is a weekly chart. We currently have an outside bearish reversal candle. So what that means is to start the week, we actually did get above the previous week's high and put in what looked like the higher low right here at 436. But that was sold off very, very quickly on the daily, really Thursday and Friday. So to start Thursday, price on the S&P 500 was back above the 200 and all moving averages. And at that point, the bands were curling up and things like that. You didn't really have too much to be concerned about. And then as the day ended, you were below all of the moving averages. And as soon as that happened, what it did was it made something like this a lot more plausible. It also made something like this more plausible. And come all the way back down here to that 400 level, fill the gap. So both of these scenarios are now on the table, but I just want to point out like how 2 days the entire script can shift. Because the previous week close, right, was low on week, and there you were above the previous week's high. And it was Thursday. So it's actually very, very bullish. I don't think the bears recognize where they were, and maybe maybe they're just cocky because of the time frame now. It's been probably 4 months of selling. And the closer you get to the bottom of this range, you get that recency bias that says, hey, we should have been selling every rally. And when you're at the top of this, you get this recency bias of, hey, we should have been buying every dip, obviously. Right? How did we not see that? And what I will point out is one of my favorite moving average crosses is the 5 crossing the 10. Right? It's telling you that short term, we're seeing an increase. And what we've actually just went through here is a 5 cross above the 10 and then a 5 cross below the 10, all within 4 weeks. And so, on a weekly time frame, that means whipsaw. And you can't assume, right, that, hey, the buy signal that was generated here that instantly got sold, you can't assume that this sell signal will instantly get bought, right? Is what it is. Now, I will say the outside candle, in order to confirm this, they must close below 426.04 this coming week. Bulls will be playing defense at the 420 level. They will be playing defense at the 415 level. They will be playing defense. If they give up 415, if they give up 420, they're going to 392, 376. Or 350. And we really don't know. From where I sit, it's pretty obvious. This is a 3-wave move down, a 3-wave move up, and now we get the 5-wave move down. Something like this, completing the 3-3-5 structure. Again, technically that zigzag pattern lower, right, because it's a 3-3-5, will look something like this when it's all said and done. And technically these can complete at the 618, the 1.0, or the 126. Anything past that, and you can even see the symmetry here. It looks just like it should, right? If it were to go to the 1.0. That's A equal to C. In time and price, that means May 16th, right around when the Fed is talking again, right around OPEX, you'll start to see some type of reversal. You know, unfortunately, from a bull standpoint, if they can't get and stay above 438 on an hourly time frame, then how are they going to do it on the weekly time frame, right? And if you look at this from a daily chart perspective, we are a bit extended from mean, meaning the 20 or the 10, or even in this instance, the 5. Right? You could have a 100-point rally to start Monday and just tag the 5. So a bit extended, but can go a lot lower. And what's interesting here is the ADX now, which was setting this, you know, lower low, has now broken out and broke this high. Now they're going to break this high or not? That's the next question. We'll find out. And do they hold this divergence here? Right? The new low, if they come down and break this low here, tag 400, do they maintain the higher low in momentum? And that's really what's going to be the tell for whether or not this is an ABC or whether or not this is the start of a longer term bear market. If they hit the 168, you could certainly have something like this play out. And then, you know, a longer term bear market. There's no reason that can't be the scenario either. Again, way, way too far out to even predict. But those are the two scenarios. Right now, the structure looks like this to me. This is what I'm looking for. An ABC correction, and we will be correcting this move here. 382 is all we've kind of done so far. That 410 level, we hit the 382, and I do believe this is a running flat, something like that. I think you came up to start here, running flat. Long wave 3, now we're putting in a 4. That is how I'm viewing this. Now, if they come down here and break this momentum structure, this little, you know, pivot low here, if they break that and they break this high in ADX, this sucker will be screaming lower, in which case we could be correcting some larger move. And in fact, that this count I have is wrong, and that this, you know, yeah, I don't know. Again, so subjective, doesn't really matter. The reality is that, you know, from where I sit, the momentum is down on every time frame, and that this is the structure we're looking for. Now, what would change my mind is close above 450 this week. Close above 450, then we still have this higher low pattern in play, right? Where we came up, we set a low here at 415, another high here at 462, and we're looking for a higher low relative to the 415 low. So, you know, until they break the 415 low, reality is they're in a higher low, higher high pattern. But from a momentum standpoint, that momentum peaked sometime between August and December last year, right? It basically peaked out in August. And ever since then, we've just been, the momentum has been straight down. And it's hard to swing trade for more than 6 days, right, in this environment from the long side. And I know we've been talking about SPY here for almost 9-10 minutes. The point is, every freaking chart you're looking at is positively correlated to SPY. So if SPY keeps selling off, so will everything else. So the levels that you want to look for a hourly and ultimately daily reversal into are down here, this 420 level down to 410. And as price comes in to that level, what we want to see is a momentum shift up, and, you know, on the hourly and ultimately the daily. And what do I mean by that? You got to at minimum get above the 5 and the 10, and we'd love to see the 5 cross above the 10, just like you did back here. Right? You didn't happen here. Tried to happen here, and it was instantly sold. You know, so again, this is all whipsaw, all chop, not a very clear picture. The trend is basically gone. Right? You still have an uptrend on the higher time frames. We have a low here at 410.64, a high here at 415. So if they break this low at 410, then the higher low, higher high pattern on the monthly that has been intact going back to the March lows will be gone. And what that does set up for is this weekly, monthly ABC zigzag, which we've been talking ad nauseum about. Okay, so that's the setup in SPY. Let's look at IWM, right? Range bound. I do believe 187 is a strong buy. Again, if that's lost, 175 is it from a Elliott wave standpoint. I mean, it's looking more and more like this is what we've got. A 5-wave move lower, you know, and you come down here, you put up that fib there. You know, it's possible that this is still just an ABC, right? I don't really like that structure as much, but the reason I'm saying it's possible is you're at the 1, 2, 3, 6 extension. So just like I talked about before, from a structure standpoint, this could still be an ABC, and when it shifts to something like this is when you tag the 1618 extension. All right, because this is obviously an ABC, and here is obviously another ABC, and each time you got an ABC, you instantly found sellers. An ABC meaning technically, right, a higher low and higher high, or an expanded flat, or a regular flat, or a zigzag. One of those types of ABCs. We didn't get a triangle here. Now, one thing I will point out is, you know, one could argue we're in something like this. I don't like that count nearly as much. This is your 1, this is your 2, and then this is some triangle, expanded triangle for 4. I don't think that's as relevant. Again, subjective. What matters here is the trend is down. The trend remains down, and the momentum remains firmly down. And looking at the monthly time frame, you do still have a series of higher lows and higher highs, but that will be broken if they break 191.88, and certainly broken if they break 187.92, because we've come off this high here, and all we've done is sell. And from a momentum standpoint, the momentum flipped on the histogram here, March of 2021. And go figure, that's when most of the meme stocks topped. March of 2021. And in my opinion, they've been selling everything since. And where does this fit in terms of the bigger picture? I have no idea. I could certainly see something like this. And here we are now starting something like this. I could also say the sentiment is so bad that we really, you know, already got our 5 waves up, and we've already got that ABC down, retracing the 50%, which we've done. That's required for wave 2. And now we're starting our next 5-wave move up. Thinking, boom, there's our 5, and now we've got to do something like this. And you know, given the sentiment, this count makes more sense to me. But what I will say is I do love the fibs. We don't have a 50% retrace, which is required for a wave 4. That's coming in at 169. So again, anything into the bottom of this band on the monthly will be a very, very, very strong buy. And until we get there, you should just remain flexible and expect all your IWM related bets to fail. That being said, we are technically in balance, meaning price is stuck. It's stuck between 187 and 208. So what does that mean? The high probability bet is as price comes into 187 that it will bounce from here. That's it. And if it does that and maintains, you know, sets a new low, right, and somehow holds that PPO right there at -1.4, then you're in good shape. You could set up another look below and fail. And really, this is a look above and fail. And now we are targeting down here. Let's take a look at, so for me, I'm looking to possibly add exposure, more exposure the closer we get down here. I'm definitely not selling down here. This is a strong buy. But again, IWM has been an avoid for me. It's not really where I want to be. I like SPY and QQQ a lot more. I showed you the setup in QQQ. And how I'll be playing this is really just go cash, wait for SPY to hit those levels, wait for momentum to flip up on the daily, and then put cash back in play. Because right now, what the reality is we need a breadth thrust. We need some form of momentum to push price higher. And everything I'm showing you is telling me exactly the same thing. The momentum remains down on the daily and the weekly and the monthly on all the major indexes. So this is a bear market. There's no other way to talk about it. And for the Qs, I know it seems crazy. It's already dropped 22%. There's no reason the Qs can't drop another 20%. I know people don't want to hear that. That's where we are. And historically speaking, the monthly PPO, if we are to go through something like this, could go all the way back down to the zero line, which is a 15-point drop from where it peaked. And that's akin to -2 to, you know, that would be the akin of the March 2020 into September 2021 drop, which would put price right back down here. Again, you know, yes, full-blown bearish. I am this bearish. No doubt about it. Right? No doubt about it. The only thing that would have me change this would be this, you know, holds. This area down here holds 317. And then we're back above 347. Until that happens, the assumption is we're going to come down here and then come back up here and then sell again. Something like that. All right, so you have to be looking to buy if they give us a dip lower to start the week. And if they give us a gap higher, you have to be looking to sell on pretty much every index. But we are getting to that point, you know, and really, if we don't talk about TNX, then it wouldn't make a lot of sense as to why we're seeing what we're seeing. This thing is super, 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 super coiled up, right? So you could take from here, come on down here and say, yeah, look at this, man. We're going way, way higher, right? Way, way, way higher. You could take it from here and say we're coming up to this guy, and then take the low down here and say, look, this wave 3 could come up to here at 365, could stop here at 3 and 11. You know, it's already past the 2618, right? So you got to look at this, like, no doubt, what's going on. And as long as this is going on, right, equities are screwed, and so are bonds. Bonds trying to bottom, trying to put in a doji this week, but, you know, lost the divergence, still below the bottom of the bands. There's no bottom here. This is not a bottom. All right, still below the bottom of the bands on the monthly, below the bottom of the band on the weekly. This is a breakout to the downside. No doubt about it. One of these numbers. And this could go for a long freaking time. All right. Now, I like the risk reward here because of the POC at 120, but I like the risk reward a lot better at 108. on bonds. And if you look at stuff like gold, well, this still can't get above 185. Keep selling off. This is a reversal candle on volume. I don't like all the volume coming in at the top, right? Back below, inside the band, gave up the 5 the very next week, pulled into the 10, rallied, now below the 10 and the 5, and the 5's about to cross below the 10. I don't want to be in a stock where the weekly is 5 below 10. We don't want that setup. And you look at the leaders that have been leading historically, now breaking down. XLE breaking down. Why isn't this what we have? This definitely could be what we have. Price comes all the way into the 20, and then's your next buy setup. And the leader within XLE that I've been tracking is APA, and that's an outside bearish reversal, right? After a very long uptrend. Again, this could still be going to 48, and on the monthly, like the momentum is still very, very strong to the upside. But if this month closes inside the bands, then 3480 is back on the table. If not, the 10. So, there goes your former leaders, XLU. Let's take a look at them now. Are they going for a monthly reversal, just like energy? Yeah. Look at the weekly. Back inside the band, below the 5. So we were above the band for 3 weeks in a row. Now we're done. That's the end of the hot hand. The thing went from 70 to 77, 10% rally for XLU is a huge rally. Now they're going to consolidate back and come back in and see if there's really any demand left down here at this 71 to 72 area. If these things are showing risk off, right? If ARK is showing risk off, again, how are we going to go anywhere? How is anything going to rally higher? And even this entire rally that you got in ARK, this whole thing, and to me, this has to be done. See, and this is what I don't get. Look. This is the highest volume. Right, and this doesn't look like the right count to me. So it's probably going to be something like this, where 1 is equal to 5, which is, yep, reversal coming next week. I mean, this is in a demand zone, and what will be very interesting is, do they hold this high here? But again, what I want to point out is, you can't get the 5 to cross above the 10, okay? This is your crossover trend following signal to follow. The 5 crosses the 10, and then boom, downtrend. Lots of whipsaw, and then boom, the real move happened. They gave up this level, they never got it back, and accelerated lower. What do you think will end this? The 5's got to get above the 10. It has to happen on these weeklies. Until that happens, everything inside of these is going lower. Right? And you had that happen on Square where you're like, boom, here's the trend following signal for the weekly. The low of this candle being your stop. Boom. And instantly sold. When that signal fired this week, everyone bought whatever it fired this week. Fired the very next week, buy on open, and you've been burned. You've been burned. Right? Can't get above the 20. Still in a very strong downtrend. But the shorter term is trying to flip. And the bulls will certainly play defense down here between 93 and 100. Right? So I see a bid coming across the board in all these major indexes. And the question is, how high do we rally from there? And watching these weeklies that are flip-flopping, like I keep pointing out, IWM's flip-flop, Squares has flip-flopped. You take a look at SMH, this thing's fallen apart. Flip up, flip down within 3 weeks. And now we're below this low. Now, generally speaking, they're going to play and catch a bid here at 237. The bulls are going to come in and play defense. Well, they tried, and you got an outside bearish reversal candle. So if they close below 234.73 this week, it's done. This is over, and you're coming down here at minimum, but more more realistically, 216. Right? And I still think there's a gap down here that they got. Yeah, they finally got that gap, or they're coming for it to start the week. And then there's these hourly gaps all the way down here. But I will point out that there is a bullish divergence. Right? So it's like, you got to keep the context of these moves. They've already moved down a lot, but they are in downtrends. So what happens? You get vicious rallies in both directions in a downtrend. What I'm forecasting to start the week is either prices go lower into Tuesday and then reverse, they gap higher, then sell off into the end of the week and then reverse. But you should get a decent rally here on all the majors. And everything here is confirming that, even the NVIDIAs. Right? If this is an expanding pattern, which it certainly could be, certainly looks like it could be, then we could get price to flip all the way back up here again. I don't really know. I will say that you've got a zigzag just like you do everywhere else, and the zigzag technically completed at the 618, but could be going to 151. And this level here is a very, very strong demand zone. So any dip down to 162 to 151 is strong demand. That being said, you should have caught a bid here at 211 and you didn't. And the momentum remains strong down on this name. Strong down. And what you could have is this bigger ABC that, like I pointed out with SPY and all these other names, that are going to take the 1.0 extension and everything will come off of this chart. This is why I spent 10 minutes on this. If they want to rally at 419 or 420, this area, and never break the lows, then everything is going to rally from there, and they will rip all the way back up to 462. All the way back up and try to set a new high relative to that. And if that's the game that they're playing, and they hold this higher low, then it will become very obvious. If they're not playing that game, and they're playing, hey, look, now we're coming for everything. Now we're coming for APA. Now we're coming for XLU, all the defensive sectors. If that's what's happening, then they won't catch a bid here. Right? That won't be what's happened. And what you'll see is this path play out. And that 392 come within the next 3 weeks. Right? By May 16th. 1, 2, 3 weeks away. So, I feel like this video is now at that 30-minute marker where I usually wrap it up. The message is the same across the board. The only safe place really is cash or bonds, maybe, if they seem to reverse here. But, what you do want to keep in mind is bonds are still in a very strong downtrend as well. So, nothing is safe. Even though going back 5 days, right, SPY and all those other things look horrible, and TLT basically remained the same. We're going to see, if there is a safe place. And if it's not bonds and it's not gold and it's not equities, then it's cash, right? And the leaders in commodities, the leaders in the XLUs, the Costcos, those will fall. And they will drag SPY down to these lower levels that we've been identifying. And we don't need to guess, all right? I can show you where the momentum is. I will point out that the weekly is absolute flip-flop, but the daily has been pretty good at identifying these trends. And if you just look, as I gave out to everyone earlier, the 5 and the 10 as a signal, you've got your signal here. Huge moves in both directions. 6%, 6%. So it seems that the daily is where it's at. These hourlies are showing way too much flip-flop. Right, look at this flip-flop. Up, down, up, down, up, down, up, down. Too much flip-flop. When the hourly is like that, you zoom out one time frame, we go to the daily, and you see a very clear trend. Right? Never did the 510 cross up. All right. And my PPO down here is using the 1226, which is even slower, but it's showing you even here like the same place. Right? That's your trend. Here's your next trend. And as a swing trader, you got to swing long and then swing short. And that has to be the way you play this. Otherwise, you're just going to get eaten up. You can't. I mean, or you can only play the long side, which will work, right? But you've got to be going all cash during these periods here, and waiting for the dailies to flip back up. The hourlies it's just too much whipsaw. So on that note, I'm going to call it a wrap here. If you like the video, hit the like button, subscribe to the channel, get notified when the next video comes out, share it on social media, and good luck.